Well, despite China's strong growth projections, the country could see its first ever corporate bond default. A solar firm says it won't be able to make an interest payment this Friday. It's something investors are keeping a close eye on. And Michelle Caruso Cabrera joins us now with more on all of this. So how serious is this? And why is this the first ever corporate bond default?
Well, it's not that all Chinese corporations have been perfect and very profitable and been able to pay their debts. It's that when they've run into trouble before, the investors in the bonds have been bailed out either by the underwriters or by the government. So this would be the first time where the government says, you know, we're not going to do that this time.
That's how capitalism is supposed to work.
Yes, exactly.
Not that they're capitalists, but...
Right. So some people are arguing this is a good thing. Like, this needs to finally happen.
So tell me about why some analysts are calling this potentially a Bear Stearns moment. What does that mean?
Well, if you've been investing in a type of product that has always paid you back, regardless of the risk involved, and then suddenly you discover one day, wait a minute, this isn't necessarily that good. Remember, that's what happened with Bear Stearns when they first had their hedge funds go under and people thought, oh, wait a minute, subprime isn't as safe as everybody thought. So that's what they're equating it with. And so suddenly there was this beginning of the ebbing of confidence, and they're worried that that's going to happen throughout the corporate bond market because maybe some corporate bonds shouldn't be as rated as high and shouldn't have as many investors as they're getting.
So should American investors be worried about this? I mean, investors who have maybe an ETF in China securities, or you said just a moment ago that this could be a good thing.
Well, it's a good thing that people should learn that just because you invest in something doesn't mean you're always going to get paid back, right? But that's a painful lesson to learn and can be painful for the economy. Whether American investors should be concerned is something we can't quite answer. There's a couple of things we know. That the Chinese financial system, if it does suffer a big freeze, is still actually pretty insulated from the rest of the world. It's not as an advanced financial system as we have, so it's not as integrated with the rest of the world. We don't think as many effects. At the same time, if China has to spend a lot of money fixing this, that's money they can't use to buy iron ore, et cetera.
Very quickly, who would own these bonds?
Oh, these could be pension funds. These could be
in the
individuals.
U.S.? In Europe?
No, it's going to be mostly Chinese holders.
That's what I was guessing. All right.
All right, Michelle, thanks for coming by. This was great. Really appreciate it. Have a good weekend.